And we're live. Welcome back to another weekly Gimbal update. I'm Amanda Repass. We've got Douglas Shreve and Keith Tyner here with us as well.
Morning.
Good morning.
I'm going to start off with the disclaimers. Content provided at this event is for general information only and not intended to provide specific advice or recommendations for any individual. Any performance referred as historical and no guarantee of future results. All indices are unmanaged and may not be invested into directly. Any economic forecasts set forth during the event may not develop as predicted, and there can be no guarantee that any strategy will be successful. These thoughts and opinions are those of Gimbal Financial and do not represent the views of LPL. We are securities offered through LPL, who is a member of FINRA and SIPC, and we are investment advice offered through Gimbal Financial, and we're registered investment advisor and separate entity from LPL. And I got a fun new disclaimer on there. Employees must wash hands before returning to work. And we are back in the office. And so it's very important. We've got 2 desks in here. We're all sharing the same desks. It's important we're washing our hands, right guys?
Amanda,
It is.
I just want to say, like, kudos to your rebuff English teacher, because I hate reading things out loud. It was something I never wanted to do if I was called on in class. And I mean, that was amazing. You
I'm
went right
overcoming
through that
fears
disclaimer,
myself.
no problems.
Thank you. It paid off.
I'd like to say that Amanda does a great job keeping this thing going, because like our internet just shut down, 5 minutes ago, and we're going, maybe we go live, maybe we don't, but she got it rebooted. And so who knows what's going to happen on one of these things.
Yeah, if we do experience some technical difficulties, folks, we'll do our best to get on. If you're on for a couple minutes and you don't see us, we'll catch you next week. And so anyway.
That's kind of what we said to Debbie, isn't it? That we couldn't get her on here, so we'll see you next week.
It's a work
Hello, Debbie.
How are we kicking things off, Amanda? Are we talking markets next, or what's next?
Yeah, let's start off with that. Or we've gotten some really good feedback too about some even topics to discuss on here. So perhaps you want to talk about some ETFs. That was a recommendation we got last week.
That's great. Yeah. Thanks for everybody's feedback. We've received several emails throughout the week. I get some funny emails normally about 5 minutes after these calls end. And so I really appreciate everybody. And specifically, thanks to the person who did reach out regarding ETFs and basically what an ETF is. And an ETF stands for Exchange Traded Fund. And so if you ever hear that buzzword out there, or abbreviation ETF, Exchange Traded Fund. And an Exchange Traded Fund is basically a basket of investments. It could be stocks, it could be bonds, it could be a blend. Most of these ETFs, you could think of them kind of like a mutual fund. Most ETFs are unmanaged, whereas a mutual fund, you might have a mutual fund manager. Like Peter Lynch was one of my dad's heroes back in the day. He ran a Fidelity mutual fund. And so a mutual fund will have a team of people or a person, an expert, making the decisions for you, whereas most, not all, but most ETFs are just a basket of securities, and they list those basket of securities every day. Whereas a mutual fund, you might have to see that basket every quarter. The ETFs are kind of nice because you can see what's in them every day. They are also priced every second of the day that Wall Street is open. Imagine if your house was priced every second of the day, Monday through Friday. That value would probably cause some emotions, because there wouldn't be as many buyers one day. There might not be any buyers one day. And so the nice thing about investments that Gimbal looks after for you is there are markets for these things. So with an ETF, they price every day, every second of the day, and we really like that. ETFs have become pretty popular in the most recent years because there are so many of them. One of my friends who is a mutual fund advisor to us, he once told me that there are so many ETFs, there's probably a left-handed catcher's mitt ETF out there. And so there's a ton. And so if you want to learn a little more about ETFs, reach out to me, shoot me an email, shoot Keith a call. We'd be happy to talk to you about them. Were there any other questions or things?
I'd add something to that. I think that if you're trading ETFs apart from us doing them on your own, they're a lot more convoluted than what you just described, in that there's challenges with trading ETFs, and that if you are trading them independent of us, feel free to give us a call and we can talk you through some of those technicalities that you want to pay attention to.
I have just a random question, but Keith, where are you?
I ask myself that all the time. So I am, I don't know, let's see here. If you can see out the window there, there is the transitionary Gimbal Financial office where you're sitting. And this is the future office that will be open here before too many more days. And it has been gutted out, and our contractors are going to be in here before long reassembling this beautiful place. Thanks.
Right on.
Yeah, I'm looking forward to that. Hey, let's dive into the markets. This has been a good week for the markets. And again, when we say the markets, there are several different ways to describe the stock market. But for the sakes of this call, when we describe the markets, what we're going to talk about are the S&P 500, which are basically big company global stocks. They may have a headquarters in the US, but they might be doing business all over the world. Think about your favorite beverage that you might like to buy. That company is selling that beverage all over the world, even though they might be based in the United States. So the S&P 500 is a really nice collection of those. And we'll also talk about the NASDAQ. And the NASDAQ is basically 3,000 plus stocks. And several of these stocks are more technology oriented. Not all, but several are. And so those are the two types of markets that we like to talk about. And then occasionally we'll dive into other areas. Over the past couple of weeks, we've liked to talk about small cap stocks. And those are the companies that are emerging. Maybe they haven't experienced the wild growth as some of their bigger brothers and big sisters. And then even from time to time, we'll talk about the bond market. Now, the bond market, I say, but my uncle would have disagreed. He was a bond trader, and he used to tell me that the bonds are like the Wild West, because with bonds, you don't have the efficiencies of the stock market where things are priced, where you see it every second of the day. There are market makers making these things happen. And so those are some of the areas of the markets that we like to talk about. And this week has really been a pretty good week. We've had 2 up days and 2 down days. And I love that. I love it when we have some back and forth where it's not just all these big wild point swings from time to time. And that's what we've had this past week. So I thought I'd share my screen here with you and show you what we're experiencing today. Okay. I'm going to switch over to the S&P 500. And if we look at the S&P 500, this is a daily chart of the S&P 500. Some of you who've been on the call for the past few weeks, you're getting used to seeing this. You're starting to see some stuff that hopefully looks familiar to you. And, maybe even by next week, when we pop this screen on, you'll say, oh, there it is, that black line. That black line is the 200-day moving average. This red line right here that I'm dragging my cursor through, that is the 50-day moving average. And so when you look at the S&P 500, you'll see yesterday, day before. And so there's our 2 up days and 2 down days, and we'll see what this week does. But nevertheless, the S&P 500 has been showing some good action lately. And as we get closer to this 200-day moving average, that is a point of resistance. This is where we could bounce off through below, and I am eager to see what happens. We don't know what's going to happen, but we're all pretty excited to see that. Keith, you got thoughts on the S&P 500?
Yeah, I do. I hear an echo on mine. I don't know if that's coming through to you guys or not, but that ceiling of the 200-day moving average right there, what ideally I'd like to see to really start moving money
Keith,
more.
Keith is kind of freezing up.
That is it in one day when it can drop through it, like down on the bottom there you see a 1.5 or looks like 1.58 volume. Doug, do you see that? Did you lose me?
Yeah, we lost you there for a second.
Okay, yeah, sorry about that. But see that was a down day. I'd love to see an up day that breaks through that 3,000 level where just a lot of the institutions come flying in there, and that would tell us that the big money is ready to get back into this market.
Yeah, and so what Keith was talking about there, guys, is he was talking about the volume, and that's what's indicated down here. If you look at my cursor, I'm waving on your bottom right-hand corner. Volume basically is the pace of the buyers and sellers. We might have more buyers than sellers one day, but we like to see a big amount of buyers come in, and what that tells us is conviction. That tells us that the big money, the institutional players, the Harvard endowments, the big mutual funds, the Fidelities of the world, they're coming in and they're making trades on the upside. And we like to see that, and we like to see that pushing stock prices higher. On the flip side, we pay very close attention to sell side volume too. And we view our role here a few ways at Gimbal, but one of the ways in regard to your investments is we want to protect your assets and we want to grow your assets. And so volume, the pace, that helps us have a little bit more influence on what the weightings of your portfolio might be. So yeah, that's a good word. Keith, let's switch over to the NASDAQ quickly. And as you can see, the NASDAQ chart, it looks pretty much the same as last week. Again, we've had 2 up days, 2 down days, but these days have been trading above the 200-day and above the 50-day, which has been a very bullish sign for the NASDAQ. Any more to weigh in on this, Keith?
Yeah, if you could throw up the S&P 600 chart for me real quick.
All right, now this is the most interesting one of the week. This chart, go ahead.
Okay. Well, I was going to say if you could compare that one, if you look at that, it's more of an L shape, and if you go back to the NASDAQ one, Doug, that one looks more like a V. If you look at that shape there, and then put up the S&P 500. It's not really this. None of those are really the same shape, and so when you were talking about buying into the stock market, it just really, it depends on what you're looking at. And so this is why it's really critical to just pay attention, for us to pay attention for your benefit, what's going on out there, because had your portfolio been all in this index, S&P 600, 6 months ago, you would still be in a lot of pain today. If your portfolio was all in the NASDAQ 6 months ago, and you go back to that one, you got that one, Doug?
Say that the S&P 5 or 6?
No, the NASDAQ. If you go back to that and you go back 6 months, yeah, so if you went back 6 months, can you put your cursor where 6 months is? So if all your money had been in the NASDAQ, you're up from 6 months ago, right? Is that crazy? And most people won't do that because that's an anxious decision because they're more aggressive stocks. but your experience in the investment world is completely different depending on what sorts of stocks, and that's where we've been really more attentive in the last few months. And where we started moving advisory accounts in first was in the NASDAQ with a little bit of S&P 500, and we've been dancing a little bit on the S&P 600 type stocks, but not very much.
Yeah, I want to go back real quick to the S&P 600. Folks, you can see here that it's a different picture. Instead of 2 up, 2 down, this one has had 3 up, 1 down. And so this is Keith's point, is these markets move independently of each other. Even here on the volume side, and then we'll get off all this technical stuff, but on the volume side, you had a couple big buy days, and those buy days came in above average. And so those are the types of things that we like to be seeing. And those are the types of things that actually wake me up with a lot of excitement in the morning. I don't know what that says about me, but when I saw that S&P 600 had a great week, I was really excited for all of you to be able to participate in that. And so anyway, that's the update on stocks. If you want to dive deeper into that, give me and Keith a call. If you've had enough of that kind of stuff, shoot us some feedback. But Amanda, let's see here. What's the order? Amanda, why don't you share something going on with you or what you're seeing from Gimbal's administrative lens?
Yeah, I got a couple of things. One thing is, how exciting is it that things are going back to normal? I know Keith's gone to a restaurant or two. He went out to breakfast this morning, and I haven't been able to go out yet, but my parents even went to a local joint down in right down the street in Carmel. So I don't know if you guys, Doug, have you been out yet?
Yeah, a couple times. I've frequented my favorite coffee shop a few times. And if any of you guys want to go grab coffee with me, I've got a great coffee place. We can sit outside and sit 6 feet apart from each other. I'd love to share a cup of coffee with you.
Yeah, and if anyone hasn't gotten a chance to come out to Carmel yet, our new office is right in the Arts District, and things are walkable. And so as the weather's starting to get nice, as things are starting to open, we'd love for you guys to stop by. We'd love to meet you somewhere. So just give us a shout and we can put something on the calendar. Administratively and service side of things, we've got some new technology things that we're checking out. One of those being scheduling things without even having to talk to you. So be on the lookout for that in the next couple weeks. I think we've got some changes coming to our website perhaps. So a lot of exciting things here in addition to our brand new office. So if you guys want,
that goes along with really, this coronavirus thing has produced a lot of thinking time for you and for all of us. And our old lives probably aren't going to be waiting for us like they were. And so we're looking forward to some new areas of growth and communication and just increasing the value that we want to bring for you guys.
Yeah,
Doug,
so if you have any, go ahead,
Doug,
Keith.
Could you get this task done for me in the next couple of weeks? I'd like to have Gimbal having 2, I don't know if the term is unisex or what the term is, 2 bicycles that our clients can stop by here for a visit, take off on the bicycles and just jump on the next road and get on the Monon. I'd love for that to be a opportunity for our clients to come visit us and then go explore Carmel. And I think that'd be an awesome deal.
Well, just ask Caroline. You don't have to ask me to spend money on bikes. That is one of my addictions. Keith, what do you have? You got a few minutes. What do you have for us today?
I got a variety of things for you. I'm going to go with my 222 thing, and I'm going to share my screen real quick. Well, my first is on the planning strategies. Now's the time to look and see what you're going to do in 2020 with your cash flow. If your income is down, this would be a good year to wait until January 1st to do all your charitable gifts, probably, and bunch those together next year. However, your charities may need it, so don't let the planning thing neglect your charities. But bunching means, with the way the new tax code is, it's better to put all your maybe 2 years of charitable contributions inside 1 year and then take the standard deduction in the year that you don't do that. And so that's what I was thinking. It's probably a good year to wait till January 1st of 2021 to bunch all those things together. Or if you need to do it this year, whatever. If your income's down this year, then next year probably be a better year to have those charitable deductions. And then the second thing is, in the planning idea, is to gift money to your kids. If your kids or grandkids aren't able to fund a Roth IRA, that's a great way to bless them 10, 20 years down the road, because if tax rates go up as I anticipate, then having their money stocked away in a Roth where they may not be able to afford it themselves right now with maybe some of the challenges with their cash flow would be a great gift that would just keep on giving. So those are 2 planning ideas. I've got 2 travel tips. I'm going to take over the screen real quick here. Let's see here. I'm going to share. I'm going to be the chart guy here real quick. Travel, if you've ever traveled and you spent any time in the car traveling, if you're heading towards Florida, there's one place that scares everybody to death, I think, on that, going from Indianapolis anywhere. I don't know about you, Doug or Amanda, where that place is. For me, that place is Atlanta. It's just like, my whole trip is scheduled around what time I'm going to hit Atlanta. And what that is like is with this NASDAQ example here, this is a traveling of a stock exchange here. Any one of these places where there's a color, somebody was traveling both ways there. There was a buyer and a seller. And why that's critical is that when you're going down this way, all the buyers were wrong, right, on this side of the V, right? They were just dead wrong. And to go back up this side of the V, you're going to have buyers and sellers. And all of the buyers have to go through all this volume of people that were buying that thought they were right over here, that they may have got scared out, and then they're going to sell into the marketplace. And so that traveling through the market has a lot of psychology to it. It's not just this V, there's this psychology of all these people that are second guessing themselves. And so with that journey, it's going to look differently for each sort of time. And so sometimes to get back up through that left side of that V, it just takes time. And that's what it looks like traveling through like the S&P 600 or the Russell 2000 to me. And I'll just give you a couple examples. So you can see this is a stock that drives a lot of this action in the NASDAQ. And so you can see through this same period of time, this stock has not only made its V back up, but it's accelerated past that. So if I travel through the S&P 500, and I show you that chart again, see it hasn't bounced all the way back. And so traveling that, you've got to get through all this volume of people that thought they were right over there. They said, how low could this thing go? And they kept buying and buying. Well, they found out it could go quite a bit lower, and they're anxious. Now there's problems that am I going to have my mortgage payment or whatever is going to go forward? And they think, well, if I can get 80% of what I bought it for, they'll sell it. Or if I get to 100%, I'm just going to get out and I'm done with the stock market forever. And so for the market to sail smoothly in this traveling, you kind of got to get through that. But here's a stock along this one. You guys know this company? This company is one of the players in the S&P 500. And so when you look at that, you go, it kind of looks more like the S&P 600 kind of shape. But if you go out farther than that, you may not even know this. This is the long-term chart of General Motors stock, and it goes back to
not too long.
2010. Did you guys know that? You could not have owned this stock before 2010, and that's a whole separate story. But why I was bringing this travel trip together is I was looking at some client portfolios in the last couple of days, and they had some stocks that they had owned. They'd been loved one stocks from their family that they'd had for years. But your allegiance to whatever, your grandmother or whoever may have bought doesn't mean anything to what your portfolio is going to do. This stock right here was a darling at one point in time, but I don't imagine most people know that the price that you would pay for this stock today, going to move you guys off my screen here. So you could buy this stock today for the price, you could have bought it anytime all the way back to 1997 on my screen, you couldn't have bought it this cheap. And you probably don't want to buy it now, but I'm just saying that's why when you're traveling through the market, you need to have some awareness of what's really going on there. My second travel tip is this thing behind me. Can you see this guy?
Yeah, that looks sweet.
I went to a local store looking for a chair because it occurs to me that a lot of us are probably be doing some traveling, and if we're going to keep social distancing, we probably need to have a comfortable chair when we sit in circles with people. So that'd be my pro tip for the week, is that if you're going to be sitting outside with friends and you're going to social distance, why not amp up the quality of the chair you're sitting in rather than one of those bag chairs that make you feel like you're in a torture chamber. So that's my second travel tip for you. And then finally, my activity tips for you are, well, the travel chair is one of the activity ones. The other one was back in the late 1980s, I listened to a lot of radio, and one of the people that was on the radio back then was a guy named Ravi Zacharias, and Ravi passed away this week, and I think Ravi is just a worthwhile person to listen to some of his thoughts. He's a thoughtful person, and what he said in the late 80s that really affected my life is that he talked about the idea of arranged marriages, and they were talking about how foolish of an idea that was, and on and on and on. And then he got to the end of the story, and he said that basically love is a choice. And so that idea of knowing that love is a choice, Ravi Zacharias taught me and had me think about that almost 30 years ago. And so I just want to pay a little homage to him this week.
Yeah, good word. Yeah, thanks, Keith. That's good. Traveling through the stock market. I like that. And, you know, we flashed up some individual securities there. And obviously those are not buy recommendations from us or any type of recommendation at all. But if you do have questions about an individual security, just give us a buzz and let's talk through it. You know, it's interesting. Gimbal partners up with several different market influencers and we have publications we read, we have people we talk to. And one of those publications that I really like is the American Association of Individual Investors. And I was having a conversation with one of you just yesterday about this. There is this investment survey out there that the AAII produces every week. And it's really interesting. They started this survey back in 1987. And historically, 38% are bullish, 32% are neutral, and 30% are bearish. Pessimistic.
So that's in any time right there, Doug? That's just a normal day. That's the normal rate.
Since 1987. And so I track the AAII report every week. I look at it to see what these investors are thinking and how they are viewing the markets. But what those historical numbers tell me is that probably matches up just life in general. You're going to have some optimistic people. You're going to have some people who just don't know. And then they're not going to make a decision. And then you're going to have people who are just pessimistic. And, you know, over the years, I've been so optimistic, I've had to repeat the course 2 or 3 times. and I don't desire to be that way anymore. I'm not saying I desire to be a stoic, but at the same time, when it comes to investing your money, we are trying to take the emotions out of the equation. It's almost impossible to do. But it's really important, this psychology of knowing yourself, allowing us to know you, allowing you to know us. And the only way to get that done is to talk about it. And so I want to encourage you to reach out to me or Keith this week. Do it this week. There's nothing like action. Do it, well, maybe not this week, next week. Do it next week. And here are the things that I'd like for you to talk about with us. What is your investment objective? This is a word that our compliance people like us to ask you, but here's what it means. Why are you investing this money? What is the goal here? What was the purpose of your resources? Let's talk about that. Let's also talk about your risk tolerance, and now is the time to do it. When the market's riding great, like 2019, risk tolerance conversations are not that fruitful. But let's talk about your risk tolerance. What type of pain can you endure on an investment? And it's okay to freak out. It's all right. That's what we are here for you on that. And then the last thing I'd like to talk about is, what is your time horizon? And that could be a time horizon for an investment, an overall strategy. These things are fluid. They change all the time. And it's all right to change your mind. And so I want to encourage those conversations this week and just let you know the markets, really, you have buyers, you have sellers. Where it becomes a complex system is when you have chains of stuff happening. And that's where Keith, me, Debbie, Amanda, we want to be here for you to help you walk through this complex system. And so I'm going to go ahead and end the meeting. We're there. It's 10:30.
I got one more thing, Doug. Let me run us over a minute. Can I do that?
Yep.
Yeah. I bought this chair today, and it had this on it. I don't know if you can see it or not, but under penalty of law, you're not supposed to cut
that off.
I cut it off, and
we're recording this.
I know, and I think it's symbolic of what we're gonna all have to walk through. Like, all these new rules have been presented to us, right? And then there's social acceptable responses to those things. But what really thrilled my heart today is that I went into the restaurant and our client, Gene, was there. He stopped by and said, I really enjoyed last week's show. And he said, I really like the idea about the credit card covering your insurance on your car. He told a story about he's in a rental car and the truck in front of him dropped off a spray paint can. He ran over it and it spray painted his rental car and the credit card paid for it. And then after he went to sit down, this lovely couple who looked to be in their late 70s or early 80s, they both had their mask on, were leaving the restaurant, and I was watching them, and one of my daughters was calling me out. She goes, what are you thinking, Dad? Are you going to make some kind of smart aleck comment? I said, no. I'm thrilled that these 80-year-olds will take the initiative for their own lives and to decide whether or not they can go sit in a restaurant or not. It just thrills my soul, and I think there's not going to be anybody to tell you when you can do it. Nobody's going to tell you that. I put a Facebook post about how the CDC now says you don't have to wash everything off. You can go back and look on that. But they didn't tell you that. And so there's not going to be anybody to tell you when you can start living again. And my advice this weekend, get that chair and go sit outside somewhere and start living this weekend.
Well, I'm going to tell you, you're out of time. So if you want to talk more with Keith, call us. But thank you, everybody.
See ya
next week.
Bye.